Well, howdy there, Internet people. It's Belle again. So today, we're going to talk about interest rates, expectations, and ups and downs. Right now, the financial world is waiting with bated breath for news from Federal Reserve Chair Powell. The questions are swirling. Are they going to cut rates? By how much? Will there be another cut later? So, the answer to the first question is almost certainly yes. They will cut interest rates. Inflation has dropped into the range that will make the Fed want to focus more on the job market. Because inflation has dropped within range, the Fed will view it as a priority to look at other factors in the economy and make decisions to keep those strong. But that's the only question that's easy to answer. That might spell a volatile week for the stock market. Under normal circumstances, market insiders have a pretty clear picture of what will be announced before it's announced. They tend to have good insight into the economic forecast and the plan to keep things stable. They don't here. There's a lot of debate and expectation about the size of the interest rate cut. Some investors expect a large rate cut. Some expect one that's more modest. Because there is a debate, investors who are emotionally on any side of the debate might overreact if their particular expectation is not met. Markets like certainty. And well, there just isn't that level of certainty they prefer. On top of that, economic projections will be released. The projections normally include estimates of where rates are headed in the future. Investors might also emotionally react to this. So, why are we talking about this now? We can just wait a little bit and talk about it when the questions are answered. The next scheduled meeting for the Federal Reserve starts November 7th, after the election. That means any policies, statements, volatility, and projections will become talking points for the election. Most experts believe that any volatility will be short-lived, but that won't necessarily stop Trump, the master of the markets who apparently doesn't know what a limit up is, from trying to predict another, quote, Kamala crash, all caps. Of course, maybe it would be good if he did. Last time he did that, we wound up seeing an all-time high. The short version, once all of this is charted, is that emotional investors might set off a period of ups and downs. If that news comes out, remember, they're reacting to their expectations not being met. They're engaging in behavior equivalent to people in the videos you see on TikTok, where the teen is getting angry because their parents bought them a Beamer instead of a Mercedes. That doesn't mean there's no risk of an overreaction creating a real issue. But if you see dire predictions, which will probably happen no matter what, just remember the predictions are probably coming from people who said the Fed would never be able to get us as far as it has. Also, remember that the stock market is not the economy, and that for most people watching this, their reactions shouldn't determine your outlook on the economy as a whole. As long as there's a rate cut of some size, it's going the right way for you. If there's not, feel free to raise your eyebrows. Anyway, it's just a thought. Y'all have a good day.